Good morning, everybody. Shane here from the Brookings home team, powered by Century 21. We took a week off. We're back again. I've got Mark here from Great Western for our Monday morning mortgage tip. It is our last Monday of October. We both have our Halloween costume on, so we scared you.
Exactly.
Or at least I do. I shouldn't speak for
Yes.
So we're going to scare the heck out of you here today. But like I said, this is the last Monday for October. In a couple days it's Halloween, so happy Halloween to you guys. But before we do that, Monday morning mortgage tip, what do you have for us today, Mark?
So the tip that I wanted to talk about, this recently happened to one of my prospects, was basically regarding their employment. So I know some people have touched on employment and kind of what we need to gather as mortgage lenders, but more specifically, when you're thinking of either switching jobs or switching the way that you're going to be getting compensated, going from like a salary type situation to all of a sudden getting commissions. Those are unique situations, and the underwriters should be aware of that, and the situation should be ran by them to see if we can still get you to qualify based on your income. So anytime you're dealing with commissions, bonuses, overtime, things of that nature, you really do have to have a pretty good history, generally 2 years of a history of that. Same goes for if you're switching, the line of work that you're in. If you were a lawyer for 6 months and a dentist for 6 months, and all of a sudden you're going to be like an investment rep, it kind of raises some red flags, and they have a hard time giving you credit for the income that you're actually getting, even in the last 30 days. So a lot of times that history needs to be there because they do verifications of employment to kind of prove that. So even if you haven't worked for 2 years, if you're a recent college graduate, something like that, they might get a college transcript just to make sure that if you got hired on for something that you went to school for, you get credit for that to fulfill that 2-year history. But you do have to be careful. I recently, had somebody that, like I said, they worked at the same company and they were getting paid salary, and then they went to actually commission only, and we weren't able to use the $50,000 that they used to make because now their pay structure is completely different and they're not guaranteed anything. So just something to be aware of. If you have any questions, every situation is a little unique. I would encourage you to run it by a mortgage loan officer. But before you might assume that you're good to go and that you're making a good living and everything else. But if we can't get it to qualify, that could be an issue. So.
Yep, good, yeah. We have, like you said, talked about a little bit. I think we've touched on the employment before, but this was a little more in-depth, I think, as far as the commission and the bonuses and what it takes. So, like Mark said, if you have any questions on any of that, feel free to reach out to him. As usual, information for Mark on top, on the bottom, on the sides, wherever your device allows you to see that, feel free to reach out to him. He'd be happy to talk to you. If for some reason you can't reach him, get a hold of me and I'll put you in touch with him. So it's not that big of a deal. He'd be happy to help you. So that is the last Monday of October's Monday morning mortgage tip. We'll be back next Monday in November. Thanks everybody for watching this week. If you know of anybody that would benefit from this video, feel free to share or tag them in with it as well. And as always, if you have a question for any of us, message us. Request it down in the comments below, whatever it takes, and we'll be happy to answer that question on our next episode. So thanks again for watching. We'll be back next Monday, and have a great week, guys. See you later.